Welcome to Mex Moves, our weekly podcast on Mexico business and finance of interest to the global audience. How are you, Eduardo?
I'm very well, Damian. How's everything in Mexico City?
Quite turbulent after the announcement yesterday, Wednesday, on the indictment of the governor of Sinaloa and many of his colleagues. But we're here to focus on business. So this week we have a great interview with Emilio Cadena. Emilio is the CEO of Prodensa, nearshoring consulting firm, helped over 1,000 companies in its 40 years of history invest and deploy people and capital in Mexico, mainly to export back to the US. And he's also the chairman of the US-Mexico Foundation. And before that, Eduardo, I think you and I are going to take a look at GDP numbers, disappointing out of Mexico, some good news on Mexican exports and AI, Grupo México, Saavi transaction in electricity generation, and then some quick takes.
Sounds good.
So let's start with Mexico GDP. As you probably saw, GDP contracted by 0.8% quarter on quarter on an annualized basis in the first quarter. That's worse than the consensus, which was for a contraction of negative 0.6%. And that was the weakest start to a year, basically, since the COVID, since the first quarter of 2020. You know, what's dispiriting and notable, I guess, is that at the same time, we also got US GDP numbers for the first quarter. And while the definitions are slightly different, I think the broad message is pretty clear. The US economy grew 2% on an annualized rate in the same quarter, driven by AI. So Mexico is underperforming, its own past, but it's also very significantly underperforming the US.
Yeah, I mean, if you annualize the 0.8 figure that you just mentioned, like with its quarterly number, then the difference is it's even larger, David. I think it would be a decline of a little bit more than 3%, probably, for Mexico on an annualized basis, taking the same statistical calculation that the US does with its GDP figures.
Yeah, so I think what drove it was pretty broad-based. Agriculture was down over 1%. Industrial sector was down 1%. And services were also down. And clearly you can't blame it on the US because the US was growing quite strongly. I think you can blame it on consumption, which has been weak, investment, which has been down, uncertainty over the kind of export regime to the US, probably a factor in affecting investment, even if exports themselves performed surprisingly well in this context. And then the nature of US growth, which is very much AI sort of investment driven, which has a relatively small trickle-on effect into Mexico. It's not a broad-based kind of consumer growth in the US, which would be better for Mexico. So there it is. I think we already highlighted that this was likely to be the case, and it's now confirmed. Now that said, moving on to the second item, Eduardo, there's some good news on exports, which is that in March, Mexico's exports were almost 30% up at $70 billion. And that's even though car exports are basically flat. So what's driving it is very much AI, electrical equipment, electronics, and Mexico is moving away from being heavily influenced and driven by the car sector to being more of a diversified industrial platform linked into the big investments that are being made in electricity generation in the US, which is AI related, and data centers itself. And Mexico is assembling. A lot of it's happening in Guadalajara. We talked last week about Flex's $1 billion investment. And I guess obviously it's all positive that this is happening, and that Mexico is becoming a kind of critical node in the AI sort of supply chain. But maybe it doesn't have a huge trickle-down effect on the rest of the Mexican economy. So a lot of the underlying capital is imported from the US itself or from Taiwan, and then sent to the US. But there isn't a huge amount of Mexico value added. So while the headline export number is very, very big, there's also a big, headline import number. And so it doesn't necessarily, as we're seeing, translate into a lot of economic growth. I mean, it's great that Mexico is assembling these items, but if a lot of the exports are actually imported first, then the value added and the impact on GDP is still relatively small.
Yeah, it seems like our external sector, it's an economy of its own, different from the rest of the economy in Mexico. It's very impressive, the figures both in the export and the import sector that came out for the month of March. And if you tally them all together for the first quarter, total exports grew 17.9%, while imports grew 18.4%, which is a substantial growth rate. And it comes from a year that was not bad despite Trump's tariffs. So it seems like the export and import sector is growing at all cylinders. Manufacturing is quite impressive, 19.7%. The exports of Mexico's manufactured goods for this trimester, for the first quarter. So, and with oil before the war at prices very low and Mexico exporting less oil, oil exports now represent very little of the total sector for Mexico, and they've been dropping, and they dropped more than 20%, double digits in the first quarter. So, yeah, it seems like it's a segment that is working on its own separate track from the rest of the economy.
So there's an interesting Morgan Stanley report out about this, about how Mexico's been positioned in the AI supply chain. Thought it'd be worth sharing some data. Like last year, Mexico's IT hardware exports grew 90%, servers were up 90%. It now represents 17% of exports to the US. With autos declining, this tech manufacturing and assembly, will soon overtake cars. And mobile computing exports from Mexico to the US are up 300%. Morgan Stanley is saying that the US is going to need to invest 100 gigawatts of data center capacity, which would be $1.5 trillion of server imports over 5 years. And that could lead Mexico's exports of servers to grow from $90 to $150 billion. And there will be some knock-on effects, like, this manufacturing has to happen somewhere. So industrial parks are going to benefit. It's going to lead to more investment, as we'll come to in a moment, in energy, which would enable this to happen, but also be good for growth, and there'll be some employment. And and a lot of it is in Guadalajara, which has obviously been, and Jalisco more broadly, which has obviously been affected a lot by insecurity in Mexico after the arrest and killing of El Mencho, which has affected the tourism and the service sector there quite a lot. So it's and it isn't an area that has traditionally been strong for car exports. So regionally, at least, you can see the car sectors, so Aguascalientes and some of the north suffering a bit as cars go down, and the west of the country benefiting a bit as the data center and overall sort of computer assembly and manufacturing and does better.
Let's see if the Plan Mexico, which seems to try to bring in or buy more from Mexico, to be useful in this case, so that the suppliers here can provide some of the elements that this AI investment is generating. I don't think it's that easy, but it's not a bad intent or not a bad plan to try to do it.
So let's move on to the big corporate news of the week, which was Saavi Energy merging its electricity generation assets with Grupo México, the conglomerate whose biggest division by far is mining, but it also has transportation. And now has a very significant energy business, which it had before. Under the terms of the deal, Grupo México will own 70%, and Saavi will own 30%. So Grupo México will be taking control. There'll be 4.5 million of gigawatts, 14 power plants, a big development pipeline of 5 gigawatts. So it's now going to become maybe the largest private power platform in Mexico. Now, Saavi was much bigger than Grupo México. Saavi, of that 4.5, I think 3.2 gigawatts was Saavi's, and about 800 megawatts was Grupo México's. So obviously, in order for the for Grupo México to have a 70% stake, they're going to be paying cash. I think it's about $880 million to Saavi's shareholders, which is in fact BlackRock. So Saavi's gone through a lot of changes over the years. It was bought by Actis, which is a private equity infrastructure fund. Actis sold it to GIP, and then GIP was bought by BlackRock, and so now BlackRock ends up owning. And so it's a cash out by a global asset manager, private equity infrastructure fund owned by BlackRock, but not a full cash out, because they're going to be owning a minority stake. And this comes after Iberdrola also cashed out in 2 different transactions, first to MIP, and then more recently to Cox Energy, a deal that actually I think closed just last week. That was a huge deal, $4 billion acquisition or so. And so as a result of that, what you're seeing is some of these big global players are effectively giving up control to more local-oriented players. Grupo México, Cox is sort of Spanish-Mexican, and the local players probably think they can navigate the sort of complexity of the electricity market. They probably think they're getting assets at a relatively attractive valuation. And in the case of Grupo México, they've got massive amounts of cash on their balance sheet, thanks to the rally in copper prices over the last couple of years. They weren't able to buy Banamex. They were beaten to that by Fernando Chicos. We've talked about it some length. So they're going kind of all in on energy, and they've got the money, they've got the political muscle to do so. They've got the know-how because they've been managing electricity assets mostly for their own internal purposes, for their mining purposes. So I think although Grupo México clearly has benefited massively from this rally in copper prices, I think the company's been kind of underappreciated as a successful sort of management story. They've deployed capex very effectively in Peru, especially to grow their copper production. They've done an extremely good job in transportation, buying assets and growing them. So it's not a company that gets a lot of headlines. Obviously, Germán Larrea is very publicity averse, and no one really knows anyone at the company apart from him. But it's a success story beyond benefiting from the sort of exogenous rise in copper prices, and probably end up being a good manager of these assets, given its access to low cost capital, its know-how, and its political muscle, which not always plays in its favor. It obviously had one of its railway concessions taken over by AMLO. It's a controversial company, but no one questions that it's basically the second largest business group in Mexico these days, after Carlos Slim's Grupo Carso Americo Mobil in Bursa Empire. So there we have it. What did you make of it, Eduardo?
No, I think it's a very interesting transaction. Just to give it a certain dimension, the 14 power plants that Saavi will now own represent about 5% of Mexico's total power generation capacity. So it's quite significant. It's going to be a very important player. They will have probably greater muscle by being this larger company, with a valuation, from what I saw and read, of $5.5 billion. So it's not insignificant. And energy, we've talked about it at great length here, is still under transition, I would say, at least, from being open, then closed, and now opening up a little bit. And I think Germán Larrea, like Carlos Slim, they're both businessmen that know this country quite well, and they're just positioning themselves to take advantage of when the call comes, because with the AI that we've spoken, energy is a crucial component, and they'll be there ready to expand when the need comes. And with the pipeline that the new company will have of 5,000 megawatts, they're ready to rock and roll, if I would say so. So the energy sector, despite all its problems, it's still providing transaction, is moving. People are positioning in it, I think, to see how it goes, where it goes, and be ready to grow with it.
Yeah, although the big global players are exiting, we shouldn't forget that, right? I mean, I think Larry Fink was with the CEO of BlackRock was with Shane Bound last week, probably getting her approval for this transaction, and they have many other interests in Mexico. But the fact of the matter is that they're going to be taking cash out when this transaction closes. Iberdrola also left, so it's also a sign that there isn't a lot of confidence from the some of the big foreign players. But in the end, I think there isn't a huge difference between foreign and domestic capital in a globalized world. What matters is that the new players are good operators and have got access to capital to grow and develop this pipeline that's in place.
No, without a doubt. I mean, it's changing hands from foreign to local is not a great sign, but at least it's the locals that are getting into it are big fish, and they might know something that we don't know. Who knows? But they are getting ready.
So shall we move to quick takes? If you want, I can kick off with Televisa. They reported pretty good results, not on this revenue level, which were down, but their cash flows and their EBITDA was relatively strong. They also announced a convertible debt, convertible into equity of 7 billion pesos, 7.2 billion pesos for $400 million. And they said that they were open to M&A in Mexico. Telco, which is a very clear sign that the deal with AT&T that some people had thought had been at least put on hold, is still live. They haven't, as far as I know, priced the convertible, so they may be just waiting to close the AT&T deal and then finance it with this convertible. And usually when companies finance acquisitions with a convertible, they think their stock is undervalued, so they don't want to issue equity at today's price, but their balance sheet is a bit stretched. They don't want to issue debt, so the convertible sort of has a hybrid element. That will be, we heard about a few weeks ago about Telefonica selling its Mexico business to Oxio, so this will be quite a dramatic reordering of the telco sector if it's confirmed. And also Televisa said that it had renewed the Mexico national team media rights through 2034 with TV Azteca, so they'll be free to air. And that comes after Netflix won the CONCACAF rights, basically the games played in North America, in the North American competitions. So Mexico gets the Mexico team, and Netflix gets the that specific tournament. I think getting the Mexico team is probably more important, and probably politically, it would be too sensitive to give it to a closed streaming platform. So I think there wasn't really much chance of it going exclusively to a streaming platform.
Yep. On my end, Damian, you saw that the government finally opened its rail service from the Buenavista train station to the AIFA, el new airport, international airport Felipe Ángeles. It's interesting that the new rail service will be an easier way to reach that terminal, which it's quite far from Mexico City. It's about 45 kilometers, twice as far as some international airports from large metropolitan areas, like JFK, New York, or Heathrow in London. So I think this is this is a good decision to have this rail, and we'll have to see whether IFA takes off with this, as it will be easier to reach. Obviously, there are some problems still with mainly U.S. routes because of the sanctions that the U.S. impose on Mexico for violating apparently some agreements. So currently there cannot be any new offerings from IFA to the U.S., but hopefully that will get resolved. And with this train or rail service, IFA will become much more used than it has so far.
Yeah, I'm a big train fan. I've been taking a lot the Toluca, Mexico City train this year, and thoroughly recommend it to anyone who wants to whiz around Santa Fe and avoid the traffic if they're going that way. So moving on, it's reported that Carlos Slim Group, American Mobile, is buying Club León, the football team. It is owned by Grupo Pachuca, which has the Pachuca team. So this would, I think, be the final step in removing multi-club ownership. And the newspaper reports that the full value would be $200 million. If he buys 51%, that would be $100 million. There's a good relationship between Slim and Pachuca. And, some people, thought that maybe Pachuca was blocking foreign investment into, or private investment into Liga MX, and maybe Slim was behind that. And so that would be, part of this process of the professionalization of the football business in Mexico as we go into the World Cup.
If I recall correctly, I think Slim had already a stake in Grupo Pachuca at some point in the past, and he sold it, and now he's buying the team on its own. So this is a continuation of a good relationship between the two main shareholders of those two companies.
Yeah, I think from 2012 to 2017, he was invested back when León was winning titles in the Liga MX, so maybe his Midas touch will come back. I think Arturo Elias is his son-in-law is the big football fan there. So if this happens, he's probably the one behind it. BBVA Mexico reported sort of quite modest growth in profits, 4.5%. Things are slowing down there. And the net interest income, the sort of core business, did reasonably well, up 8%, but there was a lot of provisioning going on, and that might be reflecting the kind of slowdown in the Mexican economy. And maybe if BBVA would be more cautious. I mean, BBVA is the private sector company that makes most money in Mexico because it's not listed in Mexico. People don't often focus on it, but it's absolutely a bellwether of the Mexican economy.
Right. And then I saw, going back to airports or airlines, that Volaris reporting, and in its report, it said it planned to reduce the frequency of some of its routes. And this is obviously because of higher jet fuel prices, and will also probably boost up some of its ticket prices. They are waiting to see whether the transaction with Viva Aerobus gets approval from the anti-competitive or the competition commission. But like any airlines, Volaris is suffering from the higher fuel cost brought on by the war in Iran and the closure of the Strait of Hormuz. So overall, the airline industry is one of the hardest hits, I would say, by the conflict in the Middle East. And the reduction in Volaris frequencies will be around 9%.
Banorte, I don't know if you saw it, but they signed a 6-year agreement with the Liga Mexicana de Béisbol. This follows the naming rights to the Estadio Azteca. And I think that's this pitching this as more than naming rights, but becoming part of the kind of operating infrastructure of the baseball league. So exclusivity or near exclusivity on payments, ticketing, POS systems, player transactions, TV, official league wallet. So they're really, Banorte's really positioned itself as the kind of sports-driven bank, and this deal, good for baseball, and and presumably good for Banorte. They wouldn't be doing it.
I think the baseball league, like we've talked Damian, is quite fun, and I think all the owners have realized that the potential there is also quite large if they do it properly and like they have. It's quite entertaining to go. I have to take it to a game when I go back to Mexico.
I've never been
I know.
embarrassed to say after so many years in Mexico. TransUnion, which owns the Bureau de Crédito in Mexico, closed its acquisition buying from Mexican banks their stake in the Bureau de Crédito, which TransUnion was already managing for a big amount of money, $930 million. So every time we fill in our financial data and banks get access to it, money's being made. The banks have to pay the Bureau de Crédito to access that data, and that's basically their business model. It's effectively a private data business. So you're now separating the banks from that, and maybe TransUnion will, now that they own it completely and fully, will invest in making more use of that data and extracting more value from it.
Interesting. Now, one item now that we are paying our taxes in Mexico, the company Tax Down joined up with BBVA, again, the Spanish Mexican bank, to help people calculate their taxes in a less painful way. The idea is very simple: bring tax filing directly into the banking app that BBVA users know and use quite a lot, and to navigate a complicated, often confusing process of filing your taxes, so they can file their returns there, automatically spot potential reductions, and even get real-time guidance if needed. So an interesting transaction in the fintech sphere.
And finally, for me, over 50, basically every Mexican company is now reported first quarter. There's too many companies to go into them. But on the consumer side, you've seen quite interesting divergence. Pretty weak numbers on the retail side, offset by their strong credit businesses. But Liverpool and Electra, had weak numbers. Walmart numbers were kind of soft, but not too bad. Same-store sales were up 3%, which was better than ANTAD, which was below 2%. And there's a gross margin improvement offset some increases in expensive. And you're beginning to see real scale in their mobile phone business and Byte, which is now coming through. FEMSA's OXXO also did surprisingly well. Their same-store sales were up 6% in the quarter, so it's a bit of a turnaround there. Their EBITDA margin was also strong, so I think analysts were quite enthused by those numbers overall. So we had a kind of a mixed day on the consumer side of the earnings. On the bank side, we already talked about some of the banks last week, but BanBajío, the CEO, has just moved to Banamex, just announced his move. They reported weak numbers affected by interest rates coming down. As we mentioned, it's a very interest rate sensitive bank, and their ROE, which is far better than Banamex, came down again to about 17%, but it has come down about 10 percentage points over the last couple of years as rates have fallen. And I think Banamex would be delighted to get 17% ROE, but BanBajío, what it hasn't been able to do yet, at least, is insulate itself from the impact of interest rates on its profitability.
Great. So shall we move to our interview with Emilio Cadena, Damian?
That makes sense to me. Well, we're very pleased to have with us today Emilio Cadena. Emilio is the CEO of Prodensa, one of the key players behind Mexico's nearshoring story. For decades now, Prodensa, which works with some of the largest companies in the US, Amazon, Uber, Ford, and so on, has helped global manufacturers set up and operate in Mexico, acting as a bridge between Mexico and large international companies. Emilio, thank you very much for joining us.
No, it's my pleasure to be here. Bien, Eduardo.
Emilio, maybe we can kick off for those that are not that familiar with Prodensa. Maybe, what exactly do you do? How do you fit into the nearshoring ecosystem? You work with companies that already have large operations in Mexico and know Mexico really well. So what is yet they still want to work with you. So what is the value added that you're providing, why companies like Amazon or car companies that have been in Mexico for decades or more than that in some cases, why are they working with Prodensa?
Yeah, well, we are, I say, a NAFTA company, right? I mean, we were born in 1985 as a company. I joined the company 30 years ago, and then we had a transition in the company. We were able to buy the company from the original founders. But really, what we did is that we became part of the ecosystem to support foreign companies to establish operations in Mexico 40 years ago when Mexico started to open to FDI. More so when Mexico moved from the traditional maquiladoras at the border into what we call the second border. Basically, what we do is support these companies throughout their, what I call their Mexico journey. So from designing the strategy and seeing if Mexico makes sense for them as part of their manufacturing footprint strategy to deciding where in Mexico it makes more sense, then to start that manufacturing operation with a lot of support on many different areas that have evolved over the years. Of course, from permitting, hiring all the people, training, finding suppliers in Mexico, now trying to solve their energy needs and other things. To, of course, staying with these companies operating to make sure that the idea that we had at the beginning, the business case that we drafted together at the beginning, actually becomes a reality. So we are, I would say, a soft landing consulting company, but extremely hands-on, extremely hands-on. So our people are on the factories, trying to understand the issues that manufacturers go through in Mexico and where it's working great and where it could be a little bit better. So, and that's why sometimes companies that have already decided to be in Mexico or that have been in Mexico for a long, long time, decide that we can support them because we have learned from many projects. We've done over 1,000 projects in Mexico. And so our knowledge of different scenarios, different issues, different solutions to solve those problems, I think bring a lot of value to companies that may already be in Mexico. But our value comes from really being in the operation and understanding what's happening in the factories. And that makes us a great consulting company also.
I believe you've been in the process or are in the process of raising capital. Why does a consulting firm need to raise capital? And if you raise the capital, what would you spend the money on?
Yeah, well, I think one of the biggest areas of opportunity that we see today in Mexico is to solve the relocation of supply chains into the region, right? I think the reshoring of manufacturing processes will be a reality more than ever because I think we're in a transition where this absolute free trade in the world has come to an end, at least for a certain period of time, I think for the next 15, 20 years. And I think most companies are looking to have resilient supply chains, which means having suppliers in the region. And although we provide a lot of help on companies on trying to find suppliers in Mexico, I think we have only been partially successful. So the idea that we have been discussing is raising capital to invest, but on manufacturing assets. I mean, not on the consulting side. We're going to keep the consulting side and continue to understand companies. But I think the most important thing our clients need today is to have great suppliers in Mexico. In order to do that, we need to invest capital on the manufacturing assets. I think Mexico has become really good and amazing companies like us, but many others, on what I call the ecosystem of manufacturing. So talk about industrial parks, talk about soft landing services and consulting companies, talk about, even energy solutions and other things. But Mexico hasn't invested a lot of time on creating more new Mexican companies that become suppliers. I think that's where China, who learned the maquiladora model actually from Mexico many years ago, And I think they copied it, but innovated on it, and they did an amazing job. And now, how can you explain that in China, in less years than what we have, open free trade with the US, they have 50 car companies, and there is not a single car company in Mexico. And I think that has to do with the philosophy that they had, and they said the core and the most important strategy that China needs to have is to invest on manufacturing assets, on companies making stuff. And I think Mexico bet was on the services to the foreign companies, mainly American, coming to Mexico, and that's what we're trying to take a different approach. So we're trying to think like Chinese, if I may say.
And why do you think Mexico hasn't made these kind of capital investments in manufacturing, that most of the capital investments are coming from multinationals?
First, I think because there were great opportunities to be a service provider to the companies coming to Mexico. It was a great business. It has been a great business for us for 40 years to support these really successful manufacturing companies coming from the United States at the beginning, most of them. Now we have worked from many places, but mostly still American. So I think businessmen and women started to invest on the services around the industry, and we started to be successful and have, returns. And so we kept going in that direction. That's one thing. But the second thing, and I think that's maybe the most important one, is that the capital ecosystem in Mexico has never supported really with a strategy and intention to do it, really the investment on new companies. And I think if you ask me, we talk about, how China subsidizes production. I think the number one subsidy that China gave to its companies was the access to capital, where in Mexico is extremely difficult. So to have capital to start a new manufacturing company, it's an adventure that takes a lot of time, a lot of resilience, and a big network to do it. And even so, it's difficult to do. So I think it is capital what has kept Mexico without growing to the speed that China has.
Yet, Emilio, you're going to try to do it. It's interesting that you're going to try to raise capital and go into the manufacturing sector. How much are you planning to invest, and which industries are you looking at where you could be a manufacturing supplier?
Yeah, well, we're raising a substantial amount of money, over $200 million, to invest on manufacturing companies. I think we're getting there, Eduardo. It's been a long process, also with a tough environment, right? Certainly, Trump doesn't help for the capital markets to feel comfortable on investing, but I think the thesis that we have is very strong. And what we want to do is, or what we are going to do, is become a supplier of what we call the capital goods industry. And think about a capital goods, it's any big piece of equipment that a business needs to have and needs to keep running as much as possible in order to provide a service to somebody else, right? And we think about three main verticals on this. One is supplying companies that make construction and mining equipment, okay? Number two, so that's a capital good. What you need is the equipment to build roads and highways, or to extract minerals, right? Number two is the medical equipment industry. So think about MRIs and X-ray machines. So it's a capital good that you need to provide health services. But we're talking about big pieces of equipment. And number three is helping the companies that make equipment to enable data centers to operate. So we are not thinking to be the electronics on the data centers. We're thinking of being a supplier to the people that make the air conditioning systems, or the energy generation systems, or the battery backup systems, that enable a data center to run. And the core of the project is metal mechanics, I think Mexico it's a great place to do metal fabrication, especially in this type of industry that we call, with high mix, low volume production, because distance matters in this type of industries, Eduardo.
Three sectors that are obviously in great demand in Mexico for that.
Yeah.
Are you buying a company, or are you setting up a new manufacturing company?
Let me make just a comment on what you said. I think these are three sectors where I do believe that the Trump analysis of the situation is actually accurate. You cannot, on the current geopolitical environment, not that I like it or not, but on the current geopolitical environment, I think the US needs to make sure that they have control and resilient supply chains to critical goods that they need for the United States to grow. So you cannot depend on countries that you might be, having a competition with, let me say, to make MRIs in order to cure your people, right? To have the proper diagnostics of your people, or you cannot depend on Asia in this current time to make all your construction equipment. So that's what we are focusing on. That these are strategic areas for the United States, where Mexico certainly is probably the best ally that the United States has for these supply chains. Now, who makes stocks and blenders and microwaves? I don't think that's that important, but I think these pieces of equipment are really important for national security. Let me speak on U.S. terms for national security. So that's what we're setting this up. And to your question, the idea is that we invest on existing companies, Eduardo, which is a little bit what the Chinese did on their second phase of growth, right? Because organic growing in manufacturing is a slow process, especially at the beginning. For a company, or for large U.S. companies to trust a new supplier from scratch, it takes a long time. So I think the speed is of the essence. So I think it's investing on medium-sized manufacturing companies in Mexico that are really good companies, but that can become great companies with some fresh capital, some fresh ideas, and taking what they have done well for many years and just have a new approach to it.
Yes, speed up things so that you're
Yes.
right there quicker than it would take you to start from scratch. On that front, your proposal is really buying into the North American region as
Yes.
integrated, not isolated, but more different than what we've had on free trades and globalization.
Yeah.
Do you see any concerns with the NAFTA or the USMCA renegotiations, or are you worried about that things might not pan out as you are expecting them to happen in this regional sense?
Let me talk about what I would see like a worst case scenario, right? That we are staying in this mode for a long period of time. But what I know from conversations already with a lot of these OEMs is that the US doesn't have a plan B for this. They need suppliers from other parts of the world, period. And why Mexico? Because Mexico is the country, together with Canada, that offers the United States actually the most regional content that they find in any other place. So if we make a component or a subassembly for any of these industries that we're talking about, this subassembly will have more US content than if you buy this subassembly from China. This is absolutely true, and nothing is going to change that, right? So I think the US understands, and I think they have been vocal about it. As you know, this past days, we had Ambassador Jamieson Greer here in Mexico, who is the USTR, understanding that Mexico is one of the most critical partners, if not the most critical partners for the US. And I think they are 100% convinced that they need Mexico as a supplier to the United States. I think President Trump wants more final assembly to happen in the US, but our model actually is making that assumption. You make the final assembly in the United States. We'll provide sophisticated parts and components and what we call modular sub-assemblies. So you finish the assembly of the Lego, if I may say it, in the United States, and have American products, but with really good supply chains from Mexico. So I actually think that's the worst case scenario. In the best case scenario, then everything moves smoothly and we ratify USMCA now. Again, USMCA has an expiration date until 2036, so it's not going away today. But of course, we have to work also with the 2-3 tariffs and things like that. But even on this worst case scenario, I think the thesis is super solid, and the US has to buy this from somewhere today.
Correct. Yeah, and Mexico is the natural place to do so at a decent price. Going back to your service side of the business, Emilio, I mean, Mexico was or is the premier beneficiary of nearshoring, reshoring, friendshoring, however you want to call it. But it kind of like fizzled out a little bit, or it didn't happen as much as it did. Is that right? And what do you see needs to be done to get that momentum going again?
The numbers that we had last year, and let me tell you, the best metric that we follow, Eduardo, to try to get a sense of how much activity there is, for us is industrial real estate absorption. That is how many new buildings in industrial parks were leased. Some of them are expansions, and that continues to be the case. And I think that's fantastic, actually. About 70% of the growth is expansion. That means that companies that are operating in Mexico, in its majority, think it works and they want to grow here. So we follow that number. The number that we had last year was certainly lower than what we had in 22 and 23, even in 24. But it's around the numbers that we had in 2019, okay? So I think that the problem is that we saw just a huge spike after the pandemic on companies relocating to Mexico, because the pandemic was one of the first signs that said, reshoring, it's important. Distance matters, right? The reaction time of your supply chains far away are not the same if you're in the same time zone as we are with the United States, right? You're talking about either weeks or months compared to days. So we saw that huge spike, and we had record years on absorption, exports. We became the number one trading partner of the United States, etc. But last 2025 was around the same numbers of 2019. So not a bad year, but certainly not as good as the other years were. The main issue here is uncertainty on where we're going to be in global trade. I think that businesses, I always say, business people better like risk and uncertainty, because that's inherited to doing business and to owning businesses and investing. But I think the only risk that we hate is not knowing, the rules of the game, right? So we want to know, once we know if we're playing baseball or football or rugby, then it's fine and we'll play the game. I think right now we are not sure what we are playing. So I think that as the sooner we have, and by this I mean the United States sets what they believe are the new rules of trade to access the US market, I think we're going to see the nearshoring 2.0, as you are calling it. And I think it can be a great moment for Mexico and for the United States, because the other thing that we know is if Mexico grows industrially, the United States grows industrially, and vice versa. We are, as China is a vertically integrated manufacturing ecosystem, North America is a vertically integrated manufacturing ecosystem. Not one single country can be self-sufficient. We need the region.
Emilio, if we look at like Mexico constraints on industrial expansion and nearshoring, people often point to energy and power constraints. They point to labor and human capital. they point obviously to security and organized crime, and maybe recently a lot more than in the past, or even more to judicial uncertainty in the rule of law. If you were to go through those issues as constraints separate to USMCA uncertainty, how would you classify each one of them in terms of the importance that you feel day to day running your business?
Let me talk about what I think are the huge opportunities from Mexico, because we are in this uncertainty. We don't drive the end of the uncertainty. That's driven by one individual and by one individual only, which is Donald Trump. So that's the fact of the matter when it comes to the international trade rules, right? We cannot do much about that right now, other than what Mexico is doing, both the government and then the private sector. I think this week with the Ambassador Greer is one of those examples. We're having the meetings, we're having the discussions. The private sector is going to Washington and giving, the messaging on why this makes a lot of sense. So that's one thing. But what can we do in Mexico? And I think we continue to be the land of opportunity that doesn't materialize 100%. And for me, if I would rank, the first thing that I would rank actually is trade facilitation or business facilitation. Mexico has to become the best place to start and run businesses. And I think we need to transition from this, I don't know, this adversity that we've had between the private sector and the government. And this is not Morena right now. I think it has been the same for many years, where the government assumes that Mexican businesses are going to cheat. So they make the rules very complex. And because there's always somebody that proves the theory that they have, that somebody is willing to cheat, then the rules become more and more and more and more complex. And I think this is, for me, Damian, the most important thing. Because if we do not develop a different mentality on this relationship between the government and the private sector, and to see that the private sector, it's actually super positive for the well-being of Mexico and the community and people, and we have a government that facilitates the opening of new businesses with a tremendous amount of speed, and then, of course, control. And I think right now we have the technology to do that. I think Mexico has done some really good things on, the electronic piece of having information on businesses. But I think we need to become the paradise to start and run businesses in the world. And I'm not talking about tax-free. I think we should pay, of course, our taxes, but it's just how quickly and how easily it is to start and run a business in Mexico. That for me is the first one. And with that, then you can go into the other aspects of capital and manufacturing ecosystems. Of course, infrastructure is the second one that I would put there. So not only in energy, but telecommunications, for factories more and more to be digital factories, to be connected factories. We need to have factories that are online 24/7, right? With high speeds of internet connection and data access. Of course, we need much more power than what we have today for the evolution of industry that we have. And we have tracked this. The KVA requirement per square foot in the manufacturing facilities has doubled in the last 10 years. So we need double the amount of energy for every square foot of manufacturing space. And that's where I think that, and I go back to how easy it is to do business, we know that the government needs private capital to invest on creating this amount of energy at the speed that we need to generate it. So for me, those are the two most relevant ones. I'm very optimistic on the labor piece. As you know, one of the things that we do for our clients is finding people. I'm not saying it's easy, but I think still the access to labor in Mexico is one of our core advantages. We have a lot of people in Mexico that are willing to work in manufacturing, that look at manufacturing as the employment of choice. And that's what the U.S. doesn't have. The U.S. has a lot of young people. We have a little bit more of a demographic bonus that they do, but on absolute numbers, The US do have a lot of young people. It's just that these young people don't want to work in factories. And in Mexico, manufacturing has been probably, especially what I call manufacturing for export, world-class manufacturing, has been a great job for people and probably the opportunity that offers more social mobility in Mexico than any other place or than any other industry in Mexico. So uh, that's one area where I'm not as concerned. Now, we need companies, what we have done is taking over the training of skills of people. I think one thing that has been lost in Mexico, not 100%, but over the years, and again, it's not only the last 7 years, it has been happening for some time, at trade schools. How do we train people on skills, on industrial skills? But companies, we have become really good at training.
And so, Emilio, in that sense, final question, you highlight the energy element as one of the concerns, one of the limitations. Is the government doing the right thing? Can you convince the government to be more open to energy? What's the feeling of you dealing with the authorities, and what's the feeling you get from abroad on what Mexico needs to do?
I think the feeling from abroad is that we need to develop much more infrastructure and very quickly. I do see a significant improvement on the relationship with the government and the conversations with the government to build the infrastructure for the industrial parks. We are not industrial park owners. We use industrial parks, but that's why we have a lot of relationship with the industrial parks. So from self-generation of energy to, starting to move more energy projects, I do see a substantial improvement on those conversations. I think that what we had was a transition of a system also in Mexico that we have to understand. And now I think the implementation of that is improving. And I do see that my friends at the industrial parks are certainly having many more meaningful conversations and projects that are solving the solution or solving the problem, sorry, on energy. It's speed. That's what my concern is. Not that we can do it, is that are we going to do it fast enough? Because it's not going to be like a shutdown of the growth, but it will dictate the speed of growth, okay? In how quickly can we develop that infrastructure. But second, I think that there is one piece of infrastructure that we don't talk about that much, which is the logistics infrastructure. If we look at the border crossings that we have between Mexico and the US, and this is both countries, this is not only Mexico, but both countries, we basically became the number one trading partner of the United States, both the country that buys more things from the United States, so that's southbound shipments, and the country that exports more to the US, northbound shipments. And we're basically doing this with the same border crossings that we had 25 years, 30 years ago, with the same lines, right? Laredo going, through downtown that for me is ridiculous. We should have the best logistics infrastructure to cross from one side to the other. I dream, Eduardo, of driving north to Nuevo Laredo, Tamaulipas, and just going on an overpass all the way to the other side on a 8-lane highway, like you see in the city of Laredo, Texas, right? Why shouldn't we have this? It's great business. It's great deployment of capital. It's great return for the capital markets. And we can do this based on trusted supply chains. And that's one thing that we have been insisting for a long time. I think Mexico needs like a trusted trader program that we can work together with the US. There are some pieces of the puzzle, CTPAT and OEA in Mexico, but we need the global entry for trucks, trains, and planes into the US and into Mexico, where if you know who I am, I'm paying my taxes, I don't use child labor, right? I'm complying with USMCA, and I'm paying my taxes. I give you visibility. Again, this is where technology has caught up and it can be the tool. I give you visibility that my truck hasn't moved from the logistics route. So AI can tell you that the probability that this shipment has been contaminated, as we call it, is zero. Then that truck should cross without stopping a single second at the border. We should be able to do that. I'm hopeful this drama that we're going through will try to set us on the right track. But I'm usually pretty optimistic intentionally. But let's see if we can do it. It would be amazing.
On that optimistic note, which we all should be, because otherwise, why should we keep on doing what we do? Thank you very, very much, Emilio, for this conversation. It was extremely interesting. I hope we can have you back once you start manufacturing things and let us know how business is going and how you view the world in a couple of years, so if not before that.
Thank you so much for inviting me, Eduardo, Damian.
So thanks, everyone, for joining us this week. We'll be back. Please review us, share us, and we'll hope to have you back next week.